Hey, today, welcome to the Sunday Stock Talk, where we're going to talk about some moves for the upcoming week, where smart money is watching this week, and what we want to watch, which setups are starting to appear in the markets. And if you want to trade with some confidence this week, maybe there's some moves we could find that Wall Street haven't even caught on to. That's what we're going to be here to do today. So hopefully you enjoy. Let's jump right into it. How are you guys doing? Everybody having a good Sunday afternoon here. What's going on, biggies, in the chat? Hopefully you're having a good one. So let's jump in. Eric, hey, what's going on, Eric? So we're going to jump right in. A couple things to watch. We're definitely looking over here at Big Bear. Big Bear AI has been one we've been covering really since about $1 a share. We saw it surge to $10 up in February, and that was from October to February. Sold back down and then made this rally. Now, let's keep in mind the whole market has rallied over the last few weeks, and we've seen it have a little bit of a pullback, but basically most stocks at an all-time high right now. What's going on, Johnny and Agua? Let's go. We're going to take a look at BKSY. Neil, that sounds good. So for Big Bear AI, you got this resistance at $8.75. That's where it got rejected earlier this week, and then we saw on Friday that it sold back down to that $9.90 range. There's a support around the $9.90 or $7, 90 cent range, and if it holds that $7.90, $8 range, we could see that bullish pattern continue, maybe consolidation up into that $9 range. If we see a sell-off at market open, which is quite possible, do be watching that Big Bear level at $7.50 to around $7.25. These levels right here are pretty crucial for them to hold ahead of their earnings, which they still got about 2 weeks, a little bit more than that, before their earnings come up. So Big Bear AI is trying to hold bullish. Now, if we see it start to validate that level, continue to bounce and maybe push back up, we do see that 8 to 10% margin for profit if it holds. Otherwise, if it sells back down here to 730, that margin for profit will look a little sweeter if we see it bounce. So just kind of monitoring it now. It did get double rejected at that 875, and we'll be watching. I did do a video yesterday, which some of you guys might have saw. And I see some good comments here. We got Marty's saying, I'm doing always what I'm doing for this live stream. I love it. Mario says Ion Q's running up. We'll take a look. And Jen, hello. Al is here watching from Saskatoon, Canada. That's pretty cool. Awesome. So when it comes to the levels at which we're watching with Big Bear, just keep in mind before we move on, Big Bear's financials are a big thing. So if they come out with financials this next beginning of August, then we could see them continue. Otherwise, there could be some pressure on the bulls here. We did see an increased number of shorts kick in later on. And then we also saw BlackRock increase the position here at in the last week. So BlackRock came in, increased their position, and that's what we'll be watching to see how that impacts the market. Now, when it comes to their financials and what we've seen develop as of recently, we have a few things to watch. We know they got some good investments from BlackRock. We also know the Veriscan deployment here is going to be one we'll be watching. And again, I did a video yesterday. I could kind of pop into it. We could actually look at the comments. But here, I'll just show you guys what it looks like, right? So here's some of the comments. And basically, I asked everybody, I said, where do you guys see this Veriscan, this facial scanner technology? When they just announced it in the news, and I see Uncompromised One is in here, awesome. When they just announced it in the news the other day, they basically said, here's the airports they're in: Charlotte, Chicago, Dallas, Denver, JFK, John F. Kennedy, Los Angeles, Montreal, Port of Seattle, and Vancouver. What I found is that they're actually at a lot more airports. And then I asked everybody on YouTube, and here's the airports that they are seeing it at. Heathrow, which we know, London Heathrow, we know they're there. Pittsburgh, didn't know that, so Pittsburgh. You got institutional buying. LA, we know that. Fresno Airport, we didn't know that, so they're at Fresno. Nashville, they have it. So thanks, Robin, for commenting there. You have Dubai to JFK, they had it. Tampa and Phoenix have the facial recognition. Not sure if it's Big Bear, but that's okay. And Sacramento, they just installed it at the Sac Airport. That's good to know. I live by there. So it's in CLT, Saudi Arabia. It's in San Diego, Boston. Those are some good ones to know that they haven't announced. Colombia and Panama, I hear, which I was wondering about that because I just flew to Colombia recently and I did get the facial scanner. I wasn't able to really see, and it was right before we actually started covering Big Bear, so I didn't really know, but that's good. So the reason I say that, just a quick reminder, we're going to see the contract values, and hopefully that kicks in for their earnings. They are at a high right now, so we'll watch them closely into Monday. Next stock we want to take a look at here from Neil is BKSY. So we're going to actually open up our Space Tech watch list. Now we've been trading BKSY for quite a while here. And BKSY is a stock that is AI tech for space. And essentially what they focus on is they've recently launched with Rocket Lab in a mission to get their Gen 3 satellites up into space. So if you guys are familiar with Rocket Lab, you can take a look at their company, go to their recent missions over here. And they just did a launch over there with Black Sky. You can see it here on June 3rd. When we were looking at Black Sky, we saw they have this AI software that can essentially read all of the cars down on Earth, all of the ports, the boats, the people, the airplanes, the heat signatures, very HD imagery with their new satellites they're launching. And they have a lot of contracts in really up into the $250,000 in contracts. And when we've looked at their financials here, they've looked pretty good. $750 million market cap, so relatively small. They fluctuate fast. But you see pretty good revenue, that blue revenue holding around 25 million a quarter and increasing year over year, increasing there without any big negative net income years except for 2021. And then we got the balance sheet here. Why would we watch here on the income statement and just say, okay, that's good? But what does the balance sheet look like? We see their assets actually doing good, up there around 284 million, and their liabilities around 196. So their liabilities have been up there, kind of rising quite a bit, but their assets do outweigh their liabilities. So they're in a good spot. Then we kind of jump into the stock. We've watched them make this run recently. We actually entered, we're up 86% on a position on Black Sky right now. And Heck V says NVTS. We could take a look. Sandesh says, can you do Veri? I would love to. Kofi says, take a look at Open. Arthur says Open. And Bat Bone says, trust but verify those. I think you're talking about the comments from people earlier. Yeah, it's good, but I will say there is an advantage to looking at them. Sometimes they're hard to trust, but we got to verify them. But I'll say that some of them are accurate. Some people told me, oh, I saw it in Phoenix, and I was like, well, they didn't announce it. And I flew into Phoenix and I saw it and it was there. So, I like to think most of the comments are basically good and that people really do see it in the airports. But I do agree with you. You got to verify what people say for sure. It is a little bit more hard to verify, right? Maybe people need to take a selfie while they're getting their face scanned or something, right? And that's a good point there. So thanks for commenting that, Pat. So when it comes to the levels on BKSY, what we know about the stock, they were consolidating for a really long time, right? So they were consolidating from left to right since 2022, and they were just going from left to right, from left to right, from left to right. See this? This is a consolidation when you have just like kind of fairly clear supports and resistance and just kind of consolidating. Then they started to make this run. We ended up buying here around when they broke out of this resistance level at about $13, and they surged up to $28 as of recently. So that was a pretty big breakout. I want to say it was about 120% at one point. And then they recently pulled back. Now, when they pulled back, they didn't pull back to just any resistance. We know there is some levels to watch here, like this level right here, kind of a previous resistance. They didn't end up really holding that. So when we zoom in and we could kind of now get back down to these last month, really from June is when this started, this run up into this peak out on July 17th. It sold back down as low as $19 and found support there on that previous support, bounced back up, got rejected at that resistance, and then sold back down to the support at $22, and we see it kind of rally back up. So it's possible that it does do some consolidation, but what we got now is watching this $24 range. If it breaks this 24.70 somewhere in here, 24.70, $25 range right here, then we're kind of looking at maybe a continuation of that bull trend. Something like this, kind of getting back up in there, and that's kind of the next target around $30 a share. It's about a 20% increase. Now, if we don't see that breakout, let's say we get rejected here, which could happen, maybe greater market sell-off, we'll have to see what it looks like tomorrow, then just watch that support level at $22. I'm in it long. I'm going to continue to hold. But if we get confirmation that, I'm not going to say it's for sure going to go up, but you see it kind of trying to push above that 200-day moving average again, get itself back above that resistance and keep the bull trend. If that's the case, space stocks are absolutely rallying right now, and we want to look for that to continue. And if it does, maybe we can capitalize on it. Now, when you're in a stock that's 750 million market cap, I see a lot of people that are like, it's been getting rejected. Watch the short squeezes. What do you think about a good stop? What's a good stop loss? Things like that. Those are some of the right questions, but ultimately we don't know. You could have perfect support and resistance. You could have perfect breaking above the 200-day moving average. We could look at the RSI and the MACD and say, oh, look at this. It's starting to maybe reverse. And we can look at, but let's wait for confirmation. And who knows, maybe by the time we've waited for confirmation, that was the move and we're already buying too late. There's all these things you could be doing, but really what we have to look at in the short term, at least, is always have a plan in place. Always know that you're going for, let's say in this case, that 15 to 25% profit, and have some risk managed that's around 1 to 3% that you're okay losing, and you're okay if that loses because you're going for a profit that is that much greater. And that's what the key is. And I stress it because it's really just so important that in the short term you realize the market could correct, and it could correct fast, especially on this the lower cap stocks. And so when you're in these stocks, of course, the long term it doesn't matter. You just keep adding to your position. It's good. Keep buying for sure when it dips. But when it comes to the short term, the only timing you have is the plan. So that's what you got to have. And so I would just leave it at that with Black Sky, is that we're going to watch here, see how it reacts. Ultimately, we'll look for that 23 to 30% move is what we'd expect if we see the breakout continue. Otherwise, we might see that sell down there to that $22 range, somewhere in there. So hopefully that's a good breakdown for you, Neil. That's kind of what we're watching on Black Sky. I like the long term. They got good contracts. The financials seem to be doing quite well. And they also have had a lot of launches recently with Rocket Lab, which I think is good. New contracts, Rocket Lab, all that stuff is good. You do see some public offerings, maybe. They're raising some money. Pretty normal for a smaller company. And you just got to basically watch those levels we mapped out here in the near term. So one thing I'm seeing here with Sam says, always have a plan. It's so true. Have a plan. And then I don't know what he says. He says, I'm okay losing these females. I don't know, man. I'm not sure what you mean at all. Are the stocks the females? I'm just confused, man. That's okay. Genfari says I had MP. Okay, so the other stock that I got some questions about was one that I really did want to take a look at. Everybody keeps telling me to take a look at it. So we're going to look at it. It's OPEN, Open Door Technologies. All right. So let me just start by saying this looks like a pump and dump. I will give it the benefit of the doubt and we'll do analysis. But can I just say it looks like a pump and dump? I'm just going to say that. All right. Let's continue to our analysis. So the first one we got is OPEN. And we're going to go stock there. Open Door Technologies, $1.6 billion market cap. They've IPO'd a long time ago. They're at $2.25. Their revenues have been around $1 billion. And let's kind of also just take a look at Open Technologies from a product standpoint. What do they do? Data tools to help city shapers make pro-climate decisions with confidence. I assume this is the company. They work in Canada mostly, it looks like, and they work with a lot of different cities. And they work in data science, software engineering to increase energy performance of buildings through technology. And they get, I'm imagining, some contracts. Let's take a look. So again, financials, you see revenue about $1 billion. Their market cap's at about $1.6 billion. If they're making $1 billion in revenue, they're still losing $100 million a quarter. They are not making any profits. Let's take the annual, pretty volatile. You had a big spike up in 2022, and then you see them sell back down with their revenues and net income still negative. Their net income is actually becoming more increasingly negative year over year. So while the billions of dollars in a quarter look nice, the negative net income is something they still have never addressed. We take a look at the balance sheet. Looks like their assets and liabilities have been gradually declining for the last 3 years, which doesn't indicate growth. I'll show you what a company looks like with growth. How about this? We'll pull up AMD stock and I will duplicate the tab. And let me just draw a look at what it looks like when you compare the good financials and the bad financials. So on the left, we have AMD. At a glance, Open looks good because you see all this revenue, right? It looks kind of like AMD's. But one thing to note, you see that orange down there? That's the net income. The net income has been negative for years on the Open stock. See that, how it's negative? But on AMD, it's positive. You see that? Positive. It's actually making money while this company's losing money. Then we get into the balance sheet. Take a look at the balance sheet. It almost looks good, right? But you have total assets up there, but see how the liabilities are so high on this company? So when we go to annual, you can kind of go like that. See how it's kind of over the years increasing in assets, whereas this company is decreasing in assets. So from a quarterly perspective, a company that's doing software like Open doesn't really make sense that they would have such a massive let's say revenue stream here in their income statement, but that their liabilities are so high when they're software. I think that's not a good place to be. They do buy, oh, it looks like they buy and sell. All right, so let's double check that we're looking at the correct. They're called Open Technologies. Okay, Open Door Technologies. Let's just double check here. Open Door Technologies. Here we go. Okay. Selling your home made easy. So it looks like a massive a massive real estate operation here to buy homes. And so you get here and then they will buy your home, and it's just a huge operation for they probably run ads and you get a cash offer for where you live. And then they say, yeah, here's how much we'll offer you for your home. Okay, pretty straightforward. But again, so it's fine. They definitely got cash flows to an extent. But when we're looking at, again, the financials from a profit perspective, they're really not doing so hot. You could see that their liabilities are going up while their assets are not. Cash flows have actually, I mean, you would hope they'd have a positive cash flow, but they lost in cash flow, net in cash, $750 million there in 2024. So, I mean, yeah, it's possible they continue to rise and do well, but when you look at those things together and then you see this big pump right here, I just wouldn't even touch the stock. I wouldn't give it the light of day. That could very, very easily sell back down. And if it does, which we've seen time and time again, could look something like this, 40% downturn or more. And just, be very careful when trading the stock. So hopefully that makes sense. Yeah, kind of a full breakdown. And some people say, oh, it's only $2.83. Just because it's a low price, doesn't mean it's a good deal, right? Yeah, you get it. Really great call out though. As someone says, it's a trap. Yeah, I mean, it's quite possible. You just got to be, it looks like a pump and dump. So again, would not touch it. That's just kind of the breakdown, right? So the other one that we had some interest on was Veritone. I think it is that Veritone. Had some interest on this one. So Veritone, this is from Sandesh. He wants to take a look at Veritone. If we just kind of open up, let's do the Veritone. We've actually done some good research on this one before. I believe it was, let's see, $122 million market cap. You see they've had awardable status on DoD's trade wins. So they could potentially get contracts, but hadn't received any. When we were looking at their softwares, they have these AI softwares, different platforms. Enterprise AI that makes people superhuman. So they're working on AI there. Empowering people, they have some places that they mention, including Amazon, EPA, CNN, Verizon. They don't specify what it is that they're associated with these companies. They just have their names there. Pasadena Police Department there. Domino's, how franchise of Global Pizza. If you learn what it is that they're doing, Veritone hire programmatic provides an applicant boost for Domino's Pizza. So it looks like maybe they're working there with Domino's Pizza, and they're looking to get them more applicants. It's kind of interesting, but there's a lot of AI tech they work on for different industries and custom AI for different businesses, and they build out for them. Now, there's some things that look a little bit strange. So their income statements have been super volatile and averaging and erring on the side of negative net income. Annually, you've seen negative net income and revenue looking volatile. And then the balance sheet, you can see their liabilities have really been holding almost higher than that of their assets. So really not nice to see their financials the way they are. As you can see, their liabilities year over year are rising higher than their assets. So their assets are down 44% and their liabilities are down. If you look annually, let's see, 2022, it just is not looking too healthy. So liabilities really surging there. And in the last few quarters, negative cash flows. And it's like, I don't think there's an excuse. I mean, you guys can tell me, what do you think? If a company is running a software operation, let's say they create a software that offers the solution here for building AI for companies. Um, what are usually one of the best marginal businesses that are known? And a lot of the times you'll hear, there's certain things that have really high margins in physical products for sure. Sometimes it's building homes, things like that. Absolutely. But one of the big ones is going to be software. And so something that I always find to be kind of like this kind of red flag where I'm like, how, is like you look at a company like Veritone, they're a software company, they build software, and they have 478 employees. How are they building software? Okay, so they're building software with 478 employees, and they're losing money every year by like they're basically spending $120 million per year. So I mean, I know it's software. I know maybe there's like data center expenses, like software engineers aren't cheap. But I mean, if you do the math, 478. I mean, I'm not gonna blatantly do it, but let's just cut how much money they spent this year in half from 125, or is that 130? Yeah, 130 down to, let's cut it in half, divide it by 2, 65 million. Let's say they actually didn't spend 130, they spent only 65 million. And then, and excuse me, I'm not right. They actually spent 100, they spent 100, that's right, 130. And so, okay, let's say they spent 65 million, not 130 like they actually did in 2024, okay? So 65 million. Let's say we divide that by 478, or 65 million divided by 478. Are they paying every single software engineer $135,000 a year? I mean, maybe, probably. And then they're spending another $65 million in what? Data center costs? Data? I don't know. It's like, I just don't understand it. When I see that stuff, I'm like, companies not operating efficiently. They have a lot of employees. They're making money, but they're like spending way more. It's kind of like an X/Twitter scenario where when Elon took over X, he's like, why do we have thousands of employees? Twitter runs on like this many lines of code. And you get what I mean? Like, I understand like employing people and stuff, but like, how much of a service is the company to the world? I don't really see much. So I'm not really, it's also like going to be the same way when we see a stock that is doing really well. It's probably going to be because they are serving the world. They're doing really well, and they have a service that is needed, and that's why we like them. And so with Veritone, looking at it, to me, it looks like it's just kind of declined. It's had its pumps, it's had its dumps, and maybe it's recovering right now, but looks pretty overextended and most likely would not be something we would invest in. So that's kind of the breakdown for Veritone. I know because sometimes people see stuff on there is a certain, like, there's a pretty large group of people that post very bad stocks sometimes on YouTube, and then you're like, oh, this stock's the best, and then we'll bring it up, and it's like, what is this? why would anybody see value in this type of deal? You know what I mean? Yeah. So how many of you guys have some um, stocks that you think are undervalued right now and you'd like me to take a look at? Daniel says ASTS. ASTS is a really great stock. I think that they're probably now overvalued at this moment. Funny story, I actually started investing in the stock back in 2022. And my friend was working with a company that was doing the space tech for ASTS. And ASTS essentially, this is the breakdown. They're in the space market. They've been growing pretty quickly. They have had not such favorable financials, but they have a great idea. Their great idea is launch satellites up into space like this. Once they're into space, they have them deploy like this and come out and create kind of like this broadband here for 5G cellular. And so it's a really great idea. It's something that I believe is part of why they've grown so much, just a really good idea. When we look at their financials so far, they've been struggling. Negative net income, negative net income. Balance sheet, though, is good. They have a lot more assets than liabilities. So their balance sheet has been good. They've been raising money. They're getting a lot of growth potential. And there's a few things that we've seen with the company as they've surged up into these levels. The market cap has got up into about $19 billion, and we see it at about $58 a share. Now, they haven't had that real tangible growth. They've partnered with Verizon as well as AT&T for the 5G from space, but more than likely we're going to see a big pullback. I would imagine AST we could see a pullback something like this, pullback as low as $30 to $40, or even we've kind of talked about this previous resistance at $38. Until they start to turn to revenue, it can only sustain so long. There's been a lot of driving up of price, things like that, but we'll most likely see a pullback, something like this, if we're going to keep it healthy. As of now, for a short-term trade, I wouldn't buy any. I do have a little bit of long-term in ASTS that I got back in 2022. Shout out to Ben working at Sabre Astronautics. He told me, man, this company is about to do something really cool. First, initially, we bought calls and then they expired worthless. And then we're like, maybe we should just buy some for the long term. But yeah, I think long term they could be good. So that's a good call out there. Thanks so much for sharing that. I respect the outlook. I know the financials aren't there yet and that they're overbought at the moment, but definitely a stock to watch as the value they're bringing to the world, to me, seems to be on the right track with their 5G cellular broadbands from space. Bat Bone says, math it, bro. You got that. Yeah, we had to do some math back there, man. It's just like sometimes it doesn't make sense. It's kind of like the whole, if we see a company that has like billions of dollars in assets or something, but they have like 10 people at their company, and we're like, what's going on here? And we gotta double check and see like where's their headquarters, how much value they actually bring and stuff like that. Totally. So you got a few other ones to look at. We could take a look, Milo, at RichTech Robotics. I've been having a lot of people tell me to take a look at it. So here's what's going on with RichTech. RichTech Robotics is a company that's trying to diversify pretty heavily early on into making a lot of different robotics. Now, they're a company that has been pumped and dumped. They've had their volatility. We saw them surge to $5.20 in January and then kind of sold off back down to the 200-day moving average recently, and that's where they're at. Now, if I jump into my robotics outlook, robotics is a great place to be looking right now, but and I'll give it some let's give it the air and let's let it breathe a little bit. This is some of the tech that they're doing. So they're in an NVIDIA Connect program. That's not anything that is special. Anybody can really get into that program. They have these robotics for serving drinks, for going around what seems to be a car dealership. They have a lot of different robotics. Scorpion, there is delivery ones for, let's say, at a restaurant. Cleaning bots, which that seems to be a 3D animation, which you got to watch out for the 3D animations. That means maybe it doesn't exist and it could be fake or it's not there yet. They have 11 patents. I don't think patents are anything that they should be, I don't believe is something that companies can be very proud of, or they can be proud of it. Absolutely. Like, that's great. But that didn't come out right. What I meant was I can make a patent too, and it's not that hard. It's kind of like Tesla kind of said, everything is open patent. I think that was a great move. And the reason that's great is because they say, look, it's a free market. We're creating value. If you want to come create more value in the marketplace and compete with us and build with us, all power to you. let's serve humanity. That's our mission. In a way, I feel like patents, while they're nice and you want to protect your idea, it's kind of like it's something you see in companies that have a little bit of a scarcity mindset sometimes. And now what they've realized is patents just like, why? So I say that because it kind of makes it seem valuable, like it's really good. They have patents, get ready, but it's a lot of times something that comes up in companies that are promising the world. So we see a lot of stuff. We see a lot of hype, a lot of different technologies, a lot of people covering it. They're talking to me about it, and they're saying, Will, what do you think? We got these different AI powered things that are coming out and we're building them. What do you think? And this is really what the facts say when it comes to RichTech. RichTech has had increasingly negative net income, meaning their net income is becoming more and more negative quarter over quarter. You can see that orange starting to get very, very red or very negative. That's not healthy, and the financials seem to be way off from what people are talking about. There's only 57 employees. How confident are you that just 57 people can deliver on all of the diversified products that they're showing you here in all these markets that they can take on? How many of you guys think that 57 people is enough to build all of the robotics that they are showcasing here? I mean, not even from like a hardware standpoint or a manufacturing standpoint for that, but like from a sales standpoint or from a software engineer standpoint. How many of you guys think so? I don't think so. And so I could be wrong. And I want to definitely give the light of day to companies that are in robotics, because it makes so much sense that robotics will grow in the future with AI and everything else. But when you see that revenue, it's kind of coming in, but their negative net income is there. Balance sheet. When you look at the balance sheet, their total assets are about 57 million. Total liabilities been holding there. Not too bad on that side of things, but definitely on the quarterly incomes, there's nothing that's showing signs of growth. So just be careful. It's a $220 million market cap company, and we could see them very, very quickly move in either direction, and just make sure that the value is very clearly being delivered to the marketplace if you're going to invest in it. As of right now, to me, it kind of looks like a downtrend. Most likely wouldn't be following it. Kind of see it like that, kind of like this. To me, I don't know that it's going to go whoop and up. I think that's way more risky, and that we could most likely see it sell down. That's kind of how I see RichTech at the moment. But again, we'll continue to monitor it throughout. Now, there's a few other ones that are really good that I'm seeing that are commented here. And we definitely, Jonathan, that's a good one. You think, I would love to hear what you guys think about them as well. Jonathan's asking about IXHL. IXHL. So IXHL has just been declining since, you see this? So this is usually when you see pumps and dumps, right? So I'll give it a shot. IXHL. I'm not sure where you're getting these stocks from. They are a healthcare place at $17 million market cap. I mean, they're not making money, and their income is super negative. Annually, super negative. I really appreciate it. I hope it's not sounding disrespectful in the way that I'm responding to the way that you're commenting, like that you guys comment stocks. It's not that I don't appreciate the stocks, and I love to see you guys in here and everything. But I do like, when we're looking at it, I mean, it's sometimes I wonder where the stocks come from. 9 employees, and they're losing $6 million a quarter. I'm sorry, but like, is there something there that specifically you're looking at? Maybe there is a certain drive of value that they're bringing, that would be the reason why they're growing up, and you see value in them for that reason. Or I do see a lot of hype articles here. There's a lot of hype articles. Maybe that's what is the reason why you're able to find them, and that somebody shared them with you and you were curious about them. But again, just see that yellow there. Just kind of watch out there on the income statement. That's like, so I love you guys, but please pick better stocks. Right. Yeah, no, I mean, I appreciate it, man. I really do. I just do want it to be valuable. So there's a stock, super microcomputer, that is mentioned by Johnny, and I'll give one more shot here to one of the stocks. Oscar Health, we checked out the other week. That actually looked not too bad. Mariam says Oscar. Um, I think their financials were actually not bad, and it just came down to their stock. I could just see AS or OSCR, and then we'll take a look. Yeah, OSCR, it looks like we were a little more bullish. We were potentially looking at this swing. They had some really good financials, actually. I don't invest in healthcare personally because I believe in alternative methods. Unless there's something that is truly breakthrough, then sometimes we do invest, which does happen. There's a lot of breakthroughs in medical science right now. But right now, not really investing in healthcare too much, just because they're notorious for manipulation. So you just got to watch out. Although United Healthcare, that one that was down, United Health being down crazy, I did see as an oversell, and that's definitely interesting. But yeah, so Oscar Health, that's kind of our last analysis. A support about $13 or $12, and maybe a recovery up into 15 to 20. So not a bad one to be looking at, Marianne. When it comes to the last one before we check out Johnny Daniels is that NVTS Navitas Semiconductor. We've done some analysis on this stock, but it looks like it's just been kind of pushing up, sold off recently. Let's see what it looks like here. You see it kind of pop to $10. NVTS stock had declining revenues and volatile revenues. Balance sheet pretty healthy though. Kind of declining total assets. Like something was missing in their line of business in the last year. Like something went off on their line of business where they don't have the same profits rolling in as they used to. They were on a really nice trajectory, and then something happened where in the last year their assets have been declining and their quarterly income has been declining in revenue. Now I don't know what it is. I'm not sure what. I haven't looked at the semiconductor in depth, but from an NVTS perspective on their income, that's how it looks right now. So when we take a look over here at their stock in the chart, you can see they recently got rejected at that $9 price point. They are selling down recently, maybe building some momentum, but I do see some big spike in institutional buying and then kind of a sell off here. Not anything that really, I don't know. I see a decline, and I see them losing business right now. So that's kind of what's going on there with NVTS. Unless there was something specific, some catalyst that you saw that made sense. Jonathan says, do you day trade or swing trade? Usually when we trade, we just get into a stock with a plan. Sometimes it's a few hours if we're, I guess a little lucky and things go up, great. Or down and great, it hits our stop or we have a plan. But usually it's not executed in one day. A lot of our trades can run for a few days, even weeks. And that's kind of what we do with about 20 to 30% of our portfolio on a consistent basis. And we do it every day at market open. We don't spend all day in front of the screen. It's mostly like we have a plan together. We look at a stock. We think it's institutional, attracting value. We buy with our plan in place, and we let it kind of roll as it is. And that's how we invest for the short term. And then the long term, we just add to the dips. We like to buy into quality, intrinsically valuable companies, and we don't trade companies that aren't intrinsically valuable as well. So when it comes to NVTS, I would probably be staying away just because of the decline. But if you guys have something specific that you're looking at for why they could go up, always feel free to drop it there. Now, Johnny has Super Microcomputer. Supermicrocomputer has made this recovery. Last time we covered it, it was breaking out of about $43. Looks like we were targeting that $66 range. That's exactly what it's been doing. Hasn't made the 50% increase, but it has increased about 17 or 18% since our last analysis. We're looking for that $65 range to be hit with Super Microcomputer. One thing a lot of people don't realize, when companies partner with XAI or they partner with Starlink, like AMD partnering with Starlink to provide the semiconductors in the satellites. That's really good. So most companies that partner with Elon's companies, they do pretty good usually. Um, and so the reason why is because of the sheer volume of tech being produced there, but also with Supermicro Computer, they're diversified in that they provide the housing for the XAI data centers, so those that hold the GPUs inside the data centers. Supermicro Computer provides the housing for APLD, who has been one we've been covering lately. This is a data center builder, right? So they build data centers and they're partnered with APLD as well. You can see Supermicro Computer here. And Supermicro is also partnered with NVIDIA and some other companies. You see them here. And part of the reason why is just because they work in the data center space. And that's what's being built right now. So I think they're a great company to be watching. I think they're a company that could have more potential in the future. When we look at SMCI stock from a financial perspective, they're a $30 billion market cap. They have had pretty consistent revenues, kind of tapered off a little bit and sold down in their revenues, but profits still seem to be rolling in. They just had a little bit of a slump here the last quarter or two. There was some articles that said that I covered a while that ended up being fake. That's why I never cover articles that aren't directly from the source now. This was about 8 months ago. I made a video on Supermicro Computer. There was an article that said from Yahoo that they're no longer working with NVIDIA. And I made the video and I said, this is probably not going to be good. It turned out they were cutting some of their business with NVIDIA, or NVIDIA was cutting with them actually. But NVIDIA mentioned them in their earnings call and said we're continuing to work with them and things look good. And it was really basically a fake article. And some people had sold their Supermicro Computer. It was right here actually. I remember it was right here, November. That's when it was. And it rocketed up. And I got some people that were like, Will, what happened? That's so bad. I can't believe you said that. And I was like, I made a video. I was like, guys, I'm never, ever going to make a video on something that we don't go directly to the source. And then the same people that were like really upset were like, that's why we're going to continue to watch you, Will. Appreciate it. And I was like, hey, man, that's what we got to do. So anyway, now we see it kind of recover. It's starting to make that move. I think they're growing for a reason. We do look at their balance sheet and they're disciplined, $10 billion in assets with $4 billion in liabilities. And so that's why we'll continue to watch Supermicro Computer. And again, Johnny, I think it's a nice one to be looking at right now. And they had some rough stuff with like taking a while to report earnings and things like that. And then the fake news that came out where they dipped. And, they're trying to get back into these levels, these all-time highs that they were at back here in 2024. It would be about a 100% increase up into those levels from current prices. What they're targeting is right here, about $66 a share. It's about a 26% increase from here. And then the next kind of level we could get into would be up in this previous support here, about a 45% increase from their current price of $52 up to about $75 a share. So we'll be watching there as well. So guys, Supermicro Computer is a good one to watch, I think. I feel that they have a lot of value they're providing. Karthik says bbai. We already covered it at the beginning of the video. That says there's a sleeper I've been watching. Poets could be a good play with stupid tariffs. It could be a long trade though. Got it. Nice, man. I'm glad it's going well. Or that it could potentially be a good one. A1 Steak says, wait till they announce 0 quantum computers sold. Talking about Rigetti. Well, they've already sold some quantum computers. They actually sold a quantum computer to, I think it's Montana State University recently. They also have some of their quantum computers for sale on their site. And they're seeing some revenue. It's not totally flat. Some people are like, it's flat. Rigetti's not making money. And they're making a little bit at least. I don't know. What was it looking like recently? Let's see. They're pulling in about $2 to $3 million a quarter, about $10 million a year. they're getting like net income went super positive last quarter, 42 million, because they got a lot of funding, but they got runway. Total assets are much higher than their liabilities. They cut their debt. So while the revenue hasn't really kicked in, they're still, if you look kind of on an annual basis, they're kind of seeing some growth there, and maybe they start to continue to pull it around. One thing to note about them is that their holders have been really increasing. So you got increased positions here, 250 holders in the quantum computing company, BlackRock, Vanguard, State Street, Morgan Stanley, Goldman Sachs. A lot more increased positions from institutions. And as far as their partnership with Microsoft, I think it actually goes further than we think. When I've looked at their tech, it looks like their quantum computer is going to house the new chip from Microsoft, the Majorana chip. So just something to consider if you're on the fence about if they could be a good company there. And A1 says, if you listen to their CEO, they're telling you that the stock doesn't deserve to be this high. Yeah, I've seen that too. I mean, when it comes to the financials, we've talked about it. The market cap's a little high right now. It's up to $17 a share. Market cap's at 5.5 billion. It is pretty high. And honestly, when it comes to their growth, that's just kind of what can happen in a company if people are buying what could be. It's kind of like RichTech we were just covering. So that's kind of the breakdown. We're also watching Tesla this week. I'm pretty bullish on Tesla. I have some positions in TSLL. I'm looking for this recovery here up into this $390 range on Tesla. A 23% increase there, which would be about a 40% increase on TSLL. So I have a position there. Why Tesla? Well, they have a lot of developments in their space tech that gives them an advantage, like Starlink and stuff like that. That gives their fleets an advantage because they can use that private company for the company's benefit. But also Tesla with their Optimus robot and everything else, really, really good. So we'll be watching Tesla for sure. We see the robo-taxi rollouts and be approved in Austin. So that could be huge competition with Uber as well. So kind of watching Tesla closely right now. So guys, when it comes to the markets, there's going to be some volatility most likely in the near term. We're going to be watching it closely. I would expect if we see the rally continue, that it could continue fast, but we also got to look for the market correction as it's possible. We've seen the market really come up the last 2 weeks. So if that happens, it's good to have a plan together. If you want to know how to trade robotics companies, AI companies, defense companies like bigbai we went over earlier, we traded a few times last week. We were in Redwire. We were trading Redwire this week. All those stocks. Then I would encourage you check out StockMate. It's the second link in the description. I'll send you a free t-shirt right now. That's what we got for StockMate. But you can get lifetime access to our daily live trading sessions. We go live every day at 6:30 a.m. Pacific Standard Time. So 9:30 Eastern. I'm there Monday through Friday. We trade and invest in the stock market. And if you want to learn technical analysis, fundamental analysis, as well as surrounding yourself with other investors, then it's the second link in the description down below. And we got a special sale for you in the lifetime access, which is awesome as it's recurring. You get that lifetime access right now. Now, when it comes to some of the moves too, we've had launch. We did have Mercatus come out. If you guys are curious, it's got some really good analysis here. If you ever are looking to get your hands on some AI models to analyze your stocks, we can actually jump in and we could, for example, search TSLA and it's going to pull it up here. And we actually can build out a future chart. It's kind of loading right now as we're in the beta here. But this is the OpenAI model. And this is the GPT Pro model that is doing the asset analysis, the chart analysis, as well as the news and the financials. And it's doing it all for us to get us a projection for the next day, the next week, the next month, the next hour. It's doing real-time analysis and it's going through right now and making it happen. We also have this chart over here. You can kind of see it's a chart of the market. If you ever want a good look here, you can always use this. It's kind of a way to see how companies are connected, and you can actually click through and get an idea of what they're looking like. So again, here it is. It kind of loaded up. We got Tesla. We have some different projections and why they're moving the way they're moving. So if you ever want to get your hands on this machine right now, you can get access to OpenAI's Chat Pro, but we have Grok coming as well as Claude and Gemini and DeepSeek and all the models for analysis. If you want to see it, it's the first link in the description. And you get StockMate as a bonus when you join, but you also get one-on-ones with me. As I do call every new StockMate, we have a special bundle there where you can get all of these models. Like OpenAI is $200 a month. Grok is $300 a month. The super heavy Ultra Max we're going to be using. The Gemini Google model is $249 a month. All these models you'll actually get, and you can get them for a 1-year license of the system as we roll it out here. And we're working on it very consistently to get it out to you. If you want the full breakdown, you want to get all of the models over the next few weeks as they roll out for the rest of the year and into next year, then there's a special deal for a 1-year license. And it also includes 6 weeks of Zoom calls that we had in our virtual stock trading system. So if you want this machine here from Mercatus, it's the first link below. And if you want to join us in our market live session tomorrow, that's a way to do it, or you can go to the second link down below. Thanks so much for watching. I see some good comments there. Marty's like, great idea. You got the macro perspective. Yeah, I mean, macro perspective, as we said, asset prices, most likely, we're still going to see them go up. Watch out for inflation, but if it hits more, like we saw it increase a little bit in the last one, it just means asset prices go up. Don't get hot. Don't get caught holding too much cash. Data centers are looking good. Booby says, yep, as well as AI, robotics, and we'll be covering more on space tech and quantum here in the near term. Hopefully I earned your thumbs up. Hit that like button. If I did, do consider subscribing, and I'll see you guys in the next live session. Thanks so much for tuning in. See you guys. Have a good rest of your Sunday.